up 97%.
Damn, son, where'd you find this?
Summit Therapeutics pumps today, but should you have it in your portfolio? It's time to find out. Time to get focused.
Time to get focused with Focus on Investing.
Welcome to Focus on Investing, where we teach you technical analysis in order for you to make money in the stock market. We release these videos as soon as we record them. So if you've received a notification for this video, then this opportunity is probably still available. If you don't want to miss out on future opportunities, make sure you go ahead and hit that subscribe button and hit that bell icon. We're on our mission to help everybody earn a little bit more money in the stock market. So if you want to join us on our mission to make some money in the stock market, then go to focusoninvesting.io. Now, with all that said, let's get the proceedings proceeding this evening. This is Summit Therapeutics, ticker symbol SMMT. And as we can see, it's been pumping today at 97%, right? So the first thing we always like to do, we always like to look at the overall shape of this stock. So let's zoom out a little bit and give us a better picture of this. So we can see that originally, if we go back to the 22nd of March, if we bring our pen tool, we can see that since then it's been on a very bear line as price. We can see that price is based on sideways. You know, there's little variation in that, and as we zoom in, we might get a little bit more of the variation. There we go. But overall, if we just get rid of this arrow and we draw our channel, now if we want to draw it from about here to about maybe here. Again, we use our pivot indicators as well that help us to draw the channels. And we can see this channel here. We can see it's basically one-sided movement. Yeah, we have a little bit of a spike to the downside on the 25th of May, have a spike to the upside on the 22nd of August, spike to the downside, you know, from the 30th of November, excuse me. And then we had a spike up today. But generally, price has just been moving sideways in more recent times. Now, if we, again, let's go a bit further back and just look at the history of this. Look at the history. We can see that it did start at a relatively higher price. We got a rise and a spike, but it was on its way up anyway. This is still a bearish movement, sorry, a bullish movement. If we look here, we can see that the overall trend of this movement in this area is still very bullish. However, we've had a spike and a pull back down, but the pullback down has kind of just continued that trend. Then we've sort of leveled off, and then we're on a slow slope down. But even when we kind of sideways, drop down, gap down, sideways, gap down, sideways, slope down. So we've got these slopes and these. We're seeing a beginning of a slope down, but then we see this massive gap up this time. So a little range, and again, just hitting the support level, the resistance level, the support level, middle, and then support again before we break down. So again, if I was to call the overall shape of price in most recent times, I'd have to say it was sideways. All right, so let's take a look at our moving averages. And we know that moving averages are a lagging indicator. So it's going to really, you know, just tell the story of what's been happening. Now, what's interesting here, you know, when we looked back, we saw this arc of price. So price rose up, heading down, illustrated in the 200 simple moving average. If we look at this white line here, it's given us the exact kind of shape of what price has done. It's kind of risen up, sloped over, and then come to this slow slope down. So as we've had this turnover here, we've kind of had, if we go back a little bit further, we've kind of had price trading slightly above our moving averages as it's popped up, been flat for a long time, it's popped up above our moving averages, as it would do because it will move quicker than our moving averages. But then it's leveled off, the moving averages are coming in line with price, and the price spikes up again, all the way up here. And as it does again, it trades above the moving averages. But then as we get to this kind of crest or this peak, which is below the moving point about the 3rd of September. We see that price trades below our moving averages. So we can see moving averages. So whenever it trades below moving averages, it's indicating a bearish trend, right? So the moving averages would generally be bearish if we class this, but because it moves 27 average, which is always going to be the fastest one, catches up first. Then we have the 50 simple moving average, which is the medium speed one, catches up second. And then by the time we've got to, you know, the 24th of July, they're all entangled within each other.
Entanglement.
An entanglement?
Yes. Entanglement.
Yeah, we see these moving averages entangled with each other and with price.
Consolidate. With the quickness.
Right, but then the resistance level of our channel, which is the top of the channel here, we're just seeing, and we'll be trading in this channel with our price and our moving averages. The 2 out of the 3 indicators, you know, moving sideways with price. One is we're bearish on, but the rest of them we're consolidated sideways. So again, on the moving averages, I'd call it a sideways movement.
Sideways.
All right. Then if we look at our key pivot support and resistance levels, with the resistance levels being green, being red, these are going to just frame our channel because we've got so much sideways movement and we're just plotting where the bottom and where the tops are repeatedly over and over again. You're going to get many different support and resistance levels in the same sort of area. So again, this is really just framing our channel that we've drawn here, right? We don't have any resistance levels directly above it. No, we don't. Our resistance levels are more up higher because of this spike here that we had on the 22nd of August. So we have a higher spike here, but generally it's framing this sort of channel because of we're getting a lot of sideways movement. So again, if we're talking about the, you know, pivot support and resistance levels, it's a sideways movement.
Sideways.
Let's get rid of our channel and let's bring in our focus on investing trend filter. Our trend filter, as suspected, gives us the same story. We're looking at mostly bearish trend as we come down into our sideways movement, and as we hit our sideways movement, if you notice, it's the same time that the moving averages collected all is between the bullish and bearish trend filter, which is around the 15th of July. We said that the trend filters, sorry, the moving averages met on the 21st of July. So around this time is when we get everything kind of moving back to side movement. We've got a change between red, green, red, green, red, green, a lot of green for a little while as we had this spike, and then eventually it settled back into green and red, green. So, and then it's only when we get to the 21st of October, then we're starting to see this bearish price movement kicking in. This is where we've seen this most recent slope. So, you know, movement, but I'd have to say, you know, since the 21st of October, we've had really a bearish price movement when we look at the trend filters. So it's been a bearish trend in most recent times. And then obviously we've had our spike today, which has turned the trend filter green, because again, today has been a very bullish day with the spike in price up. But, you know, again, with bearishness, but today is being green. So if we move our trend to, we just look at this further, we can see a similar story. It's a flash green, red, green, red, green, red, green. And then even in this little bearish slope that we had, this bearish trend, even in that bearish trend of slope, we still notice that we don't have completely red bars or red candlesticks. It's actually red, and then we've got a string of 3 green, 3 red, and then 2 green again as price turns back around. So again, we're still getting mixed signals here with the candlesticks. We're getting bearish trend, but a mix of red and green candles on the individual candles. So ideally, we'd like to see an alignment with overall price shape, which is, you know, sideways. We'd like to see overall alignment with the moving averages, which is sideways again. We'd like to see overall alignment with the trend filter, which is hindering on bearish. And then on the candlesticks, we're having, you know, consolidated back and forth, which is sideways. But having said all that, then our last green spike, you know, because we don't have alignment with all of our indicators, this isn't really something that you'd want to make as a trend trade play, right? If you wanted to get into something like this, it would be purely based on the pump and dump spike of this, right? Plan for pump and dump spikes. So when they do occur, you have to have a pump and dump strategy, right? So the idea would be to get this on the way up until it hits its level of resistance, which we can see here was around the 200 simple moving average mark. And then if you can get it to ride back all the way back down. We can see where our baseline level is. And we do see that it spikes from time to time, but then comes back to the baseline. We saw that previously in price here, where we here. We saw that it had a trend up out of that trend and then came back to the trend. Saw that again here, spike up, came back down to the trend, and here we're seeing again a spike up. So I would assume that price would then come back down to our trending line. So if you can get a trade on this, then the play here would be to get a bearish trend, riding price back down to our price level of around, you know, 75 cents. All right, ladies and gentlemen, thank you for joining us. If you'd like to keep up with more technical analysis, make sure you hit the subscribe button and also check out these two videos here on screen. Take care and peace.